Hey everyone, this is Adam Hammer. I am the Chief Investment Officer of Connor Hammer in beautiful Lockport, New York. All right, you've seen the headlines in the news, I'm sure. The big question is the AI, the artificial intelligence boom, actually going to turn into a dangerous bubble that could burst. Well, after digging into some of the numbers here, let me provide some information and maybe some answers for you. First off, this is not like the dot-com bubble of the late 1990s and early 2000s. Back then, companies had almost no earnings and stocks skyrocketed on pure hype. It was almost as if you were a company and you had .com in your name and you were publicly traded, people would buy your stock even though you had no earnings and no growth and no sales to really back it up. That's not what's going on today. Today, companies like Micron, which is a chip maker, they're kind of seeing explosive growth. Revenues and profits are jumping because of actual demand for AI memory chips in data centers. The numbers support the higher prices. Another thing to consider as to why this probably isn't a bubble is that the momentum has been really strong, faster than really any previous cycle. But it's a little bit different back than it was in 2000. Today, we're in a strong bull market, and big companies like Apple have tons of cash, and they are using that cash for AI, and AI is being used in many practical ways. In fact, you have probably used AI in some shape, way, or form, even if you don't think that you have. And a third point to consider is semiconductors, which semiconductors are, if you think almost of like a valve that controls the flow of electricity, that's what a semiconductor is. They now make up a huge chunk of the market, over 18% of the S&P 500 and nearly a third of the NASDAQ. And the leadership in technology now has broadened beyond the Magnificent Seven. For a long time, one of the critiques of the market was, well, it's just these 7 companies that are driving the market higher. But we're seeing some more participation in technology in the overall market from more than just these 7 companies. With that said, of course, there are risks. There's always risk. The tech AI industry is cyclical. In the past, we have seen big drops and big sell-offs before. That certainly could happen again. So what we want to do as investors is watch for warning signs, take notice of interest rates, and if companies are lowering their forecasts, that would certainly be something to be aware of. But here it is, the bottom line, the fundamentals are far more important than the scary headlines. This is not irrational exuberance. It's supported by real earnings and real numbers and real growth. Ultimately, you want to stay optimistic, stay smart. Of course, you always want to position your investments in a portfolio in a way that matches your risk profile. All right. Hopefully you found this video helpful. Feel welcome to contact us with any questions, and I look forward to seeing you in the next video. Bye-bye.